Welcome back to another Origin community call. I have Jonathan Snow with us today. Hey, John, how are you?
Good, how are you?
Doing well. So it should be a bit of a quicker call today. We do have a few big updates. We're going to talk about a new ARM Vault we launched, but here's the agenda for today. Show will probably run 20 to 30 minutes. We'll start with some announcements. We'll talk a bit about a buyback milestone that we hit for OGN last month. And we'll also talk a bit about the SUSD ARM, which we soft launched last week. And you'll be hearing a lot more about in the coming weeks here. So we'll start off with OGN metrics. We'll talk a bit about staking rates and the 100 million OGN that was bought back. We'll also talk, like I said, about the SUSD ARM. It is open for deposits now, so you can head over to app.originprotocol.com. You can see it on our DApp. And we do have some incentives running there, so you can get in early, earn some additional yields. And then just a quick update here. Our token holder update is live on originprotocol.com/blog. So we will go through a lot of the important updates that is on our blog. But if you want more details, you can go ahead and read the full update over there. So we'll start off with just a few quick updates on OGN buybacks. Ziad, if you can go on to the next slide. Like I mentioned, we crossed 100 million OGN bought back since the beginning of our OGN buyback campaign. That represents around 15% of the circulating supply bought up from the open market. And in June alone, it was around 5.4 million OGN bought back. So stakers right now are earning around 11.6% APY on max locked XOGN. And again, around half of the circulating supply is staked. So nice to see these rewards continuing to accumulate to OGN stakers. The buyback program is working as planned. Moving on to our next slide, I'm going to cover a few ecosystem integrations for us today since Peter is out of office. But we do have a new Fusion Vault live. We're going to go over some of our larger Morpho markets and then talk a little bit about open cover. But here are the four main updates from the past month. Our Pendle wrapped OUSD market is still performing quite well. John, I know you've been involved in this too. I think we're around $1.7 million of liquidity in the pool. So a pretty sizable market for wrapped OUSD, and LPs are earning pretty strong yields. Last I checked, it was around 16% APY. There are some incentive streaming there. I think we've had incentives now on Pendle for about a month, and we're going to reassess for the next epoch, but currently earning some pretty strong yields, and that is stablecoin denominated if you're familiar with Pendle. Not really any impermanent loss, unlike some other AMM pools. And if you want to lock in a fixed rate, you can. It's a little bit of a weird dynamic right now because you can lock in 4.3% fixed rate on PT wrapped OUSD. But I'd probably recommend just holding wrapped OUSD outright or OUSD because the underlying yield right now is just above 5%. But if you do want that certainty, you want to lock in 4.3%, still pretty strong yields that you can lock in until December. I think it's December 16th of 2026. So basically through the end of the year. Also super high APYs on YT right now. I know we placed some incentives there. Something crazy like 300%. So you can dabble in that as well if you want. It seems like probably the best opportunity right now is YT and the LP positions you can take on Pendle. Like I said, around 16% APY right now on that wrapped OUSD pool. In terms of Morpho, our OETH market still has one of the cheapest borrow rates on all of Ethereum. It's like 0.4% right now after borrow booster. We'll get into this Morpho metrics update in just a second, Ziad, if you can go back. I want to mention the Fusion Vaults and open cover first, but as I was saying on Morpho, performing really well, especially on our borrow booster markets. OETH's up to, I think, $10 million in market size, but we'll get into that more in a minute. Our Fusion Vault recently launched, and this is also integrated with Morpho. So you can loop wrapped OUSD through Fusion and get leveraged exposure to OUSD yield. I think there's around $200,000 managed in that vault right now, and the loop depends on the borrow rate. So it's automatically optimized for you, curated by Byzantine Capital. I think the borrow rates are a little bit high on Morpho right now on that wrapped OUSD USDC market. It's around 5%. So it's slightly profitable. I think that the Fusion Vault is earning higher yield than just holding OUSD outright, but it's nothing too crazy. I think it's like 5.5 to 6% APY, but really cool integration. And if we get more liquidity on that market, then it should be a pretty good opportunity there. I think utilization rates are quite high. We'll get into that on the next slide, but it's around 90% right now. If we get that down into the 80% range, then that'll be a really nice opportunity to keep an eye on. Seeing other fusion vaults in the high single digits to low double digit yield. So something that we'll definitely be keeping tabs on as liquidity improves on Morpho. And then just a note here on OpenCover, we've been working with them for a few months now. They have insurance on the staked ETH ARM vault, and now they have insurance on the ETH ARM vault. So if you want to mitigate risks when depositing to our ARM vaults, you can go to OpenCover. And instead of paying for insurance coverage, it just takes a portion of the yield. So pretty cool integration. I know they work closely with Morpho and some other large protocols as well. So solid option if you're looking to mitigate risk when depositing to Origin's ARM vaults, now available for ETH and the staked ETH ARM. Now we'll move on, talk about some details of a few of our Morpho markets. I won't go through every one of these, but I do want to mention a couple of them. The OETH USDC market has Borrow Booster enabled. So the borrow rate before incentives is 5.2 to 5.5%. So a pretty standard borrow rate for USDC. But with Borrow Booster incentives, the current borrow rate is 0.35%. So you can claim those rewards through Merkle. And where this is different than most incentive campaigns is those incentives are funded by the OETH collateral deposited in the market. So it's not a short-term campaign. It's something that's sustainable. I mean, we've had this market for a long time now. Not sure exactly how long, but it's been at least 6 months in production, probably closer to a year at this point. And the yield's been fluctuating between negative APY, meaning you're getting paid to borrow USDC, and around 1%. And there's some spikes with utilization, but the average is probably around 0.5%. It's been really competitive, one of the best places to borrow USDC on Morpho. So if you're interested in that, definitely check out the OETH USDC market. We also have a very similar market on Base. So if you're using Base, you can use Super OETH-B and USDC market to take out loans in USDC and pay a very similar borrow rate. So you can see the borrow rate before incentives, 4.5% or so. And then with those incentives is 0.3%. So basically free to borrow USDC on these markets. But out of those two, if you're looking to deposit with size, I'd recommend Ethereum mainnet, the OETH USDC market, because the market size is around $10 million. Just looking through, we have a few other markets here. I want to call out the wrapped OUSD USDC market. So this is what I called out earlier with the Fusion Vault launch. We have around $850,000 in market size there. So it is growing. Nice to see that that market's approaching $1 million, but pretty high utilization rate right now, like I mentioned, around 90 to 91%. So we're going to see what we can do to get that utilization rate down a little bit so that Fusion Vault will be more profitable for depositors. And if you want to just head over directly to the market and loop repped OUSD yourself, you'll be able to do that. And then there are a few other markets here I don't think we need to get into right now, but those are available. If you are an ARM depositor, we have collateral for ARM tokens listed on Morpho as well. Still a bit small liquidity, but it is there if you want to utilize it. So those are the updates on the Morpho markets for today. I think this wraps up the ecosystem integrations, but we have some news to cover on the product side. So I'm going to let John talk about this. Want to announce the new ARM vault that we've been working on and then give some updates on the other ARM vaults that have been in production for a while now.
All right. Yeah, as Ryan alluded to, I mean, I guess he didn't allude to it, he said it out loud. Our SUSDE ARM is now open for deposits. So this one's obviously our first stablecoin denominated ARM. You know, it won't be our last, I'll say that much today. What's also really cool about this ARM is this is actually our first one that we've done an integration on the Merkle side to provide additional incentives. So you can take a look on our analytics. We've updated this as well. So the pool is boosted up to a 2% additional yield. Obviously, that is capped incentives, and that will kind of hold for a certain amount of TVL. But it's cool to see that integrated, and we may end up using that functionality in the future for other ARMs. But yeah, right now it's doing pretty well, around 4.5% trailing, with an additional boost, obviously, as part of that as well. The incentive program will run until the end of August. So Not a lot of deposits so far, so there's certainly a lot of opportunity there as well. And just as a reference point, this works the exact same way as all of our other arms. We are acquiring discounted tokens, and then the spread is what generates the yield. So another really cool product in the ARM suite. We can go on to the next slide here.
Hey, John, I had a quick question on the 30-day trailing APY. I see it's at 4.5% right now. Is that APY displayed inclusive of the Merkle incentives that we have running?
Yes, we have updated that to reflect the entirety of the portion that would end up for the LP. We had gone through a couple conversations on the product side, whether we wanted to keep that just being the base yield. But we felt that, at the end of the day, an LP is trying to make a decision based on the earnings. So if there are rewards available at any given time for any of our ARM products, that should be reflected in what is distributed to the end user. Like I said, you can go on analytics. Analytics will show you the breakdown, fully transparent. It says exactly what's coming from that arbitrage yield, again, buying or acquiring that kind of discounted asset and then redeeming it. And how much of that is on the incentive side. So right now, like I mentioned, it's up to 2% in additional yield. But yes, the 30-day would reflect both values.
Okay, yeah, that makes sense. But incentives have only been going on for something like 4 to 5 days right now, and since it's 30-day trailing, like those incentives really aren't impacting. Like the 4.5% is fairly close to the organic yield right now, and as time goes on and these incentives keep streaming, then that'll be accounted for more. But I know last week after we got a couple more deposits and had a bit more liquidity in the ARM, we had a couple really high APY days. I think there were 2 days that broke double-digit APYs, so pretty good signal that yield's increasing with TVL right now.
Yeah, I mean, we had 3 days where the blend, I'm going to call it the blended APY, was north of 11%. So again, it's one of those things that volatility is our friend when it comes to ARM. Is you never really know what's happening there. And again, this sort of levels out a bit as TVL kind of grows. But yeah, and I mean, I think it just goes to show that obviously it's going to take a little while for the true 30-day trailing to have its impact. But even in a couple days of 11, 12, 13, 14% net yield, distribute it to the LP. So on July 3rd, it was 14.85%. Really hard to argue with that, that's for sure.
Absolutely. And then there is one key difference too that I wanted to call out before we give some updates on the staked ETH ARM, but the lending integration differs a bit, right, on the SUSD.
Yeah. Yeah, it's the newest iteration of ARM, whereas we no longer charge the protocol fee on the lending market yield. So for an LP, in periods of downtime when there's not a lot of volatility, and the lending market actually ends up being kind of our hurdle rate on pricing, that's kind of the baseline. If the arbitrage opportunity is greater than that hurdle rate, then we obviously will adjust our buffer in such a way that we pick up those trades because we want to, distribute that yield downstream to LPs. But we also understand that LPs could just deposit on Morpho or wherever Aave, and we felt that it would be a bigger benefit to LPs, not to charge additional fees on that portion. So during periods of downtime, and as I know Ryan's mentioned many times in the past through these community calls, is that volatility is where a lot of the spread is earned. So if that only happens 5% of the time, that means the other 95% of the time LPs are earning even more than they were before. So obviously this is a new ARM. We're going through the discussions on whether to upgrade or deploy other ARMs for other products, but this is kind of a novel feature that we wanted to add, again, just to continuously distribute as much to LPs as possible.
Yeah, makes sense. And you mentioned Morpho and Aave. That is an important distinction to call out as well. For the other two arms, we've been lending idle assets to Morpho to earn lending yields. It's a little bit different for the SUSD arm. We're lending to Aave instead. So kind of cool to see a different integration coming up for this arm. Seems like it's working well so far.
Yeah, very much so. And I also think, it is great to be able to leverage both for different arms. And obviously, at the end of the day, we're trying to provide the best product for LPs, and obviously something that they can help compound their growth in that regard. So we can go talk about our oldest arm next, the Lido arm. So the 30-day trailing on that's about 3.2%. And we talk a bit about volatility, and again, I'm kind of repeating something that I know has been mentioned before, but like 30-day high, 11.2% with the median at 3.06, just goes to show like how varied it is. But the really awesome thing about ARM is that you get to capture those days where things go a little bit crazy. Around just under 100 million in stake ETH trading volume in June, more than 2.4 billion in cumulative TVL since the Lido arm opened to the public, which is really, really cool. And this is all on just under 6 million in TVL, which is great. ETH arm 2.4 30-day. Again, high of 14.3, median at 2.48, 32 million in volume, and about 130 million since February in cumulative volume, which again, really great. Just around 4 million in TVL for that arm.
Yeah, it seems like the market's been a little bit more quiet. There hasn't been as many volatile days as there were in prior months, but it's nice to see we're still earning. Like for the ETH arm, it seems pretty comparable to ETH right now. Obviously, you get the upside when there are more volatile days, and then the staked ETH arm is still yielding something like 30 to 40% higher than staked ETH rewards from liquid staking. So not too bad.
No, and you know what, we've talked about this in the past. You have one good day that's a 90% yield day, and the math really changes. And again, it's one of those products that works through volatility, and we hope with this fee reduction, obviously on the SUSDE arm, not these other arms for the time being, will again just help our LPs earn even more yield for using the ARM product, which is really great.
Yep. And if you annualize the yields too, it's even higher. I think it's around 4% APY on both of these ARM vaults. So a little bit lower this month, but if you look at it on an annualized basis, it's still very strong.
Yep, absolutely. Okay. OUSD. OUSD, it's a really stable product in the last little bit here. I feel like I've just been, every time I look in analytics, we're kind of around that 5% range. Pretty cool. I think I want to say it was in June we did some shifting around of the collateral allocations, just again making sure that we're driving as much yield to OUSD holders as possible. Vast majority of that is still coming from Ethereum, Morpho on Ethereum, and a little bit of a split from the other two chains for Morpho, along with the AMO, which I don't need to go into. Ryan mentioned this at the start. Obviously, the pretty big lift in TVL. We made sure that there was a reasonably attractive Pendle wrapped OUSD market. And I looked earlier, it's a little over 1.7 million there. So that's certainly had quite a lift on TVL with OUSD.
Yeah, it's nice that not too much on OUSD, but good to see that we're still earning around 5% APY. I mean, we're seeing a lot of other passive yield bearing stable coins yield usually between 3 to like 4.5%. So it does seem like we're out competing on the yield front with OUSD, which is nice to see. And a lot of that comes from the upside you get from earning in a multi-chain environment. Even though OUSD is currently only on Ethereum mainnet, you're earning from Morpho instances on Ethereum, on Base, on Hyperliquid. So if all of a sudden utilization spikes on one of those other networks and there's an attractive market to get into, you don't have to bridge your assets or worry about which market you're in. OUSD earns that yield for you. So that's where that additional yield comes from. And like you said, it's nice to see that it's been a really steady product, especially over the past few months, around 5% APY.
Yeah, and I just flag it for the conversation's sake. We're always taking a look at new markets, seeing what fits within our risk classifications, and again, trying to make sure that capital gets allocated in such a way that we are earning the best risk-adjusted yield for a stable coin. So, going to continue to do that, and you've seen a bit of a collateral distribution shift from previous months where we were kind of concentrated into a few markets, and now we're kind of a few more, but we're always on the lookout just for compelling risk adjusted markets to deploy capital to. So yeah.
Awesome. Well, I think this might wrap up our product updates. A little bit quicker call than usual today. But definitely check out the SUSD ARM Vault on the Origin dApp. It's soft launch right now, so we haven't announced it. It's your time to go earn some additional incentives. Yields looking strong organically as well. And then if you want to read into further updates, visit our blog, originprotocol.com/blog, and read through our token holder update. But straight into the point, I thought it was a good call, John. Thank you for joining, and we'll see you again next month.
Okay. Thanks, everyone.
Bye, guys.